Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 19th, 2025, and we're diving into Blink Charging's second quarter 2025 earnings report. Blink Charging, a leader in electric vehicle charging solutions, has just released their latest financial results. Joining us today is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Blink Charging's latest report provides a lot of insights into their current performance and future prospects, especially in the rapidly growing EV market.
Revenue and profitability overview. Let's start with the top line. Blink Charging reported total revenues of $28.7 million for the second quarter of 2025, which is a 38% increase sequentially. However, the gross profit was only $2.1 million, and the net loss was $32 million. John, can you break this down for us?
Absolutely. The revenue growth is impressive, driven by a 73% increase in product sales and an 11% increase in service revenues. However, the gross profit margin was significantly impacted by non-cash charges related to obsolete inventory and PP&E items. Excluding these, the gross profit margin would have been around 30%. The net loss reflects these charges and ongoing operational expenses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of -17 cents, but Blink Charging reported an adjusted EPS of 26. What does this tell us about the company's performance relative to expectations?
This indicates that Blink Charging missed analyst expectations. The larger-than-expected loss per share can be attributed to the significant non-cash charges and operational inefficiencies. While the revenue growth is promising, the company needs to address these cost issues to meet future expectations.
Strategic initiatives and acquisitions. Moving on to strategic initiatives, Blink Charging recently acquired Zemetric, Inc., and amended its agreement with Envoy Technologies. How do these moves position the company for future growth?
The acquisition of Zemetric is a strategic move to enhance Blink's product offerings, particularly in fleet and commercial applications. This acquisition brings in new technology and leadership, which could drive future growth. The amended agreement with Envoy Technologies reduces Blink's liabilities, allowing them to focus on core operations and improve cash flow.
Operational efficiencies and future outlook. John, Blink Charging has made efforts to improve operational efficiencies, reducing compensation expenses by 22% and eliminating $8 million in annualized expenses. How does this impact their future outlook?
These cost-cutting measures are crucial for Blink Charging as they aim to strengthen their business model and move towards profitability. With $25.3 million in cash and equivalents, they have a buffer to support ongoing operations. The company expects continued revenue growth, driven by an expanding installed base of chargers and increased utilization.
Key takeaways. In summary, Blink Charging has shown strong revenue growth and strategic initiatives, but they need to address cost inefficiencies to improve profitability. Thank you, John, for your insights.
Thank you for having me. Blink Charging is making significant strides, but the path to profitability will require careful management of expenses and strategic growth.
Thank you for watching Smart Stock Watch. If you found this analysis helpful, please like, share, and subscribe. We'd love to hear your thoughts on Blink Charging's performance in the comments below.